Hi, I just wanted to take this opportunity to talk about a case study with Tesla. So let me just quickly walk through it. So in my community here, I'm just going to go to Classroom, go to Case Studies, and you can see Tesla as the top one here. So just starting off, in late March, I was running two options positions, one a short call and one a short put. I was also long 50 shares. The short call was 410 and the 415 short put. The reason why I was short the 415 put was basically that I sold Tesla when the price was actually a lot higher and was actually near that level. But when the Iran-US conflict really starting to hit off and stock dropped quite a lot, so the put actually went deep in the money. So this was the position that I was really managing quite a lot, and not one that I would have opened if I had the chance there. I wouldn't have opened it there, but that was the position I was in, so I was managing it accordingly. So as the premium was quite high, IV was spiking obviously with the conflict. I was taking advantage of that and selling premium as much as I could. So you can see here, this is the quick intro to where things were. So moving on to March 31st, I considered selling an at-the-money call at 350. The reason why is I wanted to try and collect as much credit as I could, considering the high IV environment. But I went against that just because, based on my technical analysis on the chart, there was a support area just at that point. So I held off in doing that. On that same day, I also chose not to close a protective put on Google. One, it would have left me unhedged in also a long position. I was long in Google. So both of these decisions actually will turn out to be quite important later on. So moving along here. So on the thesis, basically Trump warns the US will hit Iran extremely hard. With that, oil actually shot up 7%, futures dropped 1%. So I asked in my community that was this a real escalation or was it negotiation posture? Just want to call out something here that you will see here that these specific points here, these are all posts that I made in real time. They're all time stamped, so you can actually go into my community, see my post, you can see them happening. So they're not after the fact analysis, they're in time making these decisions. So this is a pattern that I actually spotted time and time again with regards to the warnings from the US, the markets acting on that pretty aggressively and just trying to establish, is there a pattern here and is there a way that the market is reacting to this, good or bad? So I basically thought it was just escalation to maximum fear and then negotiate from a position of strength. I could have been wrong, but I wasn't changing my positions on overnight headlines, especially when the structure and thesis on the underlyings were really changing. So this was tested 4 times in 3 weeks, deadline, ceasefire, etc. All played out exactly as I documented. So moving on here, 2 days before I actually got assigned, I caught myself doing something pretty dangerous. I considered rolling down my short call for an extra couple of $100 credit. It did look fine on paper, but the real reason, truth be told, was just to try and make my profit and loss feel better. It wasn't a good trading decision, but it was more an emotional decision. Thus, I rejected it. The decision that I rationalized was not the right one. So something to note, when you catch yourself managing your P&L instead of managing your position, that may be a signal to stop. So moving down here further, on April 10th, a CPI day, this is where I actually got assigned. You can see here in the post, I got assigned 100 shares. at the strike price of my short put, which was $415. Bear in mind, at the moment, this stock was trading around 346. So all in all, I was underwater about $70 a share right away. So total position, 150 shares, effective cost basis of new 100 shares was about $396. This would be the decision most traders would act impulsively, make rash decisions, be scared with a large negative position on their books. But fortunately, the framework saved me. The key decisions that I had made weeks earlier, I classified this as a type B, which was a position that I was actively managing. And I knew that ahead of time. It wasn't something that sprung all of a sudden. I didn't really consider beforehand. So I was relatively calm, even considering the macro backdrop that was happening in the background. So I rolled a short call down from 410 down just down to 405 with 70 days to expiration. This is a mechanical rule. I marked out key levels on the chart. So I was just responding purely from the technicals, almost ignoring at this point the news headlines. So if I move down here to recovery, so you can see here just around this point here, you can see this is where we had quite a large bounce. It went from 347 approximately up to about 391. So that was a massive cost basis gap that was filled and a massive character change as far as the price action was concerned. So my previous thoughts around risk management, be it with share reduction, etc., was actually further on hold, I would say, at that point. So, because I was debating whether I should buy a put, rolled a short call down, trimmed 50 shares. Today they all look obvious not to do that, but the decision was really bound by the discipline that I had during that point of time, weighing up the different options on the table, evaluating the different trade-offs, and following my framework, even when the data in front of me wasn't necessarily supporting me. So moving further on down, on the hardest part here, I would say the hardest part here was really around the FOMO. It wasn't really around fear, it was just FOMO of most of my focus was around managing my current positions, not really taking advantage or initiating new positions, which would have worked out well in hindsight, but I was more focusing on really stress testing my framework, my decision management in a time of high stress, particularly from the macros perspective, especially watching a rally that played out, and I didn't really participate that much in it because I didn't want to overextend my attention. I didn't want to overextend my portfolio, add more risk where I felt my attention was needed more elsewhere. So discipline has a cost, but it's always cheaper than the alternative. So lessons learned: the trades you do not take define your discipline more than the ones you do take. Another thing was, if you catch yourself managing your profit and loss instead of your position, which is something that I have been guilty of many times in the past, it's a time to really stop and evaluate what you're really trying to achieve. Another thing is pre-classifying your positions at entry. This is where you walk through the different scenarios, what could play out and what sort of actions that you may have at your disposal at that time, as opposed to reacting just in time, because let's face it, we more often than not don't make the best of decisions when we are emotional, and certainly the markets can bring out that emotion. Just focusing around your process and just separating your process from the actual P&L number that's in front of you, just making sure you're following your plan and you're not making rash decisions. And really just evaluating the markets just in a relatively objective sense, it allowed me to establish a pattern that was unfolding where the market was just really looking for an opportunity to rally. Any kind of massive crisis was really being absorbed and stabilizing. So it just really was us looking for an opportunity for things to calm down, for it to gather its feet and take off. And that's pretty much what happened. And you could see from my post that I made, that was my rationale all the way through this, is that I was thinking that it was more prudent of me to just really focus on my process, look at it in objective terms and try to understand what's really going on behind the scenes. As I said, every decision that I made in real time was time-stamped in my original briefings that you can see in my community. They're documented before the outcome. They're not written in hindsight. If you want to learn more, see more of these type of case studies, maybe even see it in real time as it plays out, you'll be able to see that in my community posts. So feel free to join. It is free, and I look forward to seeing you on the inside.